Aloha, everyone. It was a pretty good rally attempt by the market today, but really, overall, in the past two sessions, at the end of last week, we're still down 0.56% on the NASDAQ, and on the New York Stock Exchange, we're down 1.60%. So there's really no reason to get too excited over this rally, considering the Russell 2000 is also down 1.16% since Friday. So keep everything, within the context of our overall pattern. And in doing that, so far, we just continue to bounce. Today is not a follow-through day. This is now, if you want to count this as day one of a rally attempt, I'll go ahead and give it to you, even though I need normally for whenever you finish down to be finishing near the highs of the day on a big reversal. But for now, I'll give it to everybody. So day one, day two, day three, day four, day five, day six, day seven, day eight. We're now 8 days into a new rally attempt without a follow-through day. Whenever you get past the 9th day without a follow-through day, subsequent follow-through day action that does occur has a very high rate of failure, and overall follow-through days have a huge rate of failure. 3 out of 4 follow-through days are going to fail anyway. However, 0 market rallies have ever started without a follow-through day. So the 1 quarter that works is how you lead to all the others. So the other 3 quarters of the time, you cut your losses extremely short. The 1 quarter of the time, that's how you end up having your big uptrends. They don't start without them. So on that note, really, the market is still range bound. The key tail right now, this is why day trading on an intraday basis with the hot stocks, and like I said, there were a couple today. ITEK was well played in the day trading chat rooms, and VRA was an earnings winner that was also played in the chat rooms. VRA worked a little bit intraday, but still didn't have the most powerful oomph, the kind of powerful oomph that ITEK did. Had intraday. And then stocks like Ford, as you can see, they're still trying to base out, so it's kind of in no man's land anymore, but you can see how it acted in the past week. So there still continues to be action on an intraday basis. iTech is a billionaire play, VRA an earnings winner, and then ZYNE was in play today, but it's not the kind of stock we're looking for. Even ITEK isn't the kind of stock I'm looking for. It's more like VRA earnings winners, but overall, outside of intraday action, there isn't much to do. Now, there was kind of some good news. LHCG, I've been shaking out of all of it. Unfortunately, hit my final sell stop here on the 24th. But on an end-of-day basis, it's still being tracked. And if you remember yesterday, this Perfect Speculator scan pre-qualifying stock produced a pocket pivot point signal. I said that if this was an uptrending market or even like a better better market where the pullback was normal and not an all-out crash that we saw last Monday, I would be interested in going long. Good to see it did work. LHCG worked. So that now gives me confidence to go ahead and next time a long signal comes up to go ahead and take it. And we do have one this evening. It's an add signal in a stock that actually I am still long. It's one of 5 stocks I'm still long. But before we get to that, just finishing up with LHCG. So it's good to see it works. It's still a short base overall. It's still basically consolidating, but a nice immediate day of work. And another positive to see is that there are some quality Perfect Speculator scan stocks that are holding up, but I don't like their short-term patterns. But if they do break out following a fall-through day, it won't matter. You got to take them. I don't care how ugly the pattern is. New highs are new highs. But ALK, DY, remember, flagged it hard here. This pocket pivot point signal should have gone long. Got shaken out of all my DY, and then probably should have gone ahead and taken a small position in DY, but that's a pretty volatile move. I'm not big into taking it, so I don't really, I don't want to beat myself up too much for passing on DY, but it is one of the better Perfect Speculator scan quality signals that we've received since that Monday sell-off. But besides DY, Lululemon is retaking out its 50-day moving average and strong volume. INCY and Rare are the 2 leading biotech stocks. Not only are INCY and Rare in my Cancelim quality, scans, or my Perfect Speculator quality scans, but they're also high-price stocks, both over 100, and I like them. But you know what? When you got INCY moving 7% and Rare moving 9% one day in this kind of market, not something I like to buy. And if you look in the arithmetic chart in Rare, it's really just building a consolidation pattern. In INCY, you can see how crazy and volatile it is compared to its old average true range ATR. So it's really gotten volatile. So once again, not things that I like to participate in a rough market. And then NBIX retaking this 50-day moving average. Now, in case anybody remembers, back when we had the October sell-off, as soon as we got a follow-through day in the indexes, I took like any perfect speculator stock long that took out the 50-day moving average. Remember in October, AVGO, no real signal here, but it retook a 50-day moving average as a perfect speculator stock following a follow-through day, so hence it was a new long. Same with SWKS, no real signal, but retook its 50-day moving average following a follow-through day. And it also did that in the month of October. The best rally start in the month of October and in the month of March. So when we got a follow-through day in October, that's a good sign you're going to trend higher into the end of the year. That is what happened. We take our signals. A follow-through day in September isn't going to necessarily allow the same thing. And also, so remember, today's 50-day moving average takes by NVIX, RARE, and follow-through by INCY are kind of irrelevant to me because this isn't October, this isn't March, this is the worst month historically and seasonally for stocks in September. So I need proof before I go long these perfect speculator stocks that are retaking their 50-day moving average after sell-off, especially when we don't have a follow-through day yet. But all those are something to keep in mind. Obviously, STMP still consolidating nice. The volume isn't great, but it's still holding up. Post, BOP is going the wrong way, but overall that pattern is holding in. RCL, also CanSim quality perfect speculator stock, holding in there. It's not a great pattern, but still not looking too bad either. And VMC, same similar situation. Once again, none are great, but it's all a good start. We get a follow-through day, get some pocket pivot point signals. All of those stocks I just posted are definitely long potentials. But overall, there really still isn't much to do. It's, you know, it's going to be choppy. This is why I expect it to get choppy until we really break out above these highs right here or these lows right here. You know, we're going to probably have to back and fill a little bit. And don't forget the death cross is coming on the NASDAQ. That's already happened in a lot of indexes. So there's still a lot of overhead pressure. There's just no reason to get excited on today's gains as it wasn't that much and volume was below average on the NASDAQ and also lower than the day before on the New York Stock Exchange. Now, while we have also no new long positions, no new short positions, no sells, we do have one add signal. FIX, CanSim quality name. Used to be perfect speculator, not sure. It's not perfect speculator, I'm sorry. Let's see if it's not even in the pre-down. This one doesn't care about the price of a stock, but yeah, still not in there yet, but it is a CanSim quality name. It was confirmed in my price volume BOP scan. As you can see, BOP is surging to a much higher green BOP level. Volume is a lot higher than any of those volume days on the pullback. Even when it got its big support, that big volume surge, volume is bigger today. And key to today's price action is that it's closing near the highs. If it wouldn't have closed that close near the highs, it would have probably been more of a churning day. Wouldn't want to go long. But with the surge in BOP, the surge in volume, the nice price action, feel like we can go ahead and take an entrance since LHCG worked yesterday. However, as we start, market's not under a follow-through day, not under an uptrend. We got to keep things small, so it's only going to be 1% of my account capital. And that 1% of the account capital matches what I currently only have long still in it, which is equivalent to 1% of my account capital. The first sell stop on FIX is going below 27.20, and then I'm going to go ahead and let the rest of the position ride to 26.15. However, if it takes out 27.20 on heavier volume before taking out 26.15, it will be fully sold off. And on the entire position, 26.15 is my final sell stop level. So with this new long position, that'll get my dollar cost average up to probably around $24 to $25 a share on this, which will still allow me to leave the position with a tiny gain, which is better than a loss or break even, and that's good enough in this market right now. So right now, we continue to bide our time. It's probably backing and filling time. More than likely, if we do break out, we'll probably run a resistance to the 5,200-day moving average. So this is definitely not a time to get excited about this bounce attempt. We gotta let it play out and see what happens. It's still too early.